Good evening, everybody. Welcome to another episode of Inside the Numbers. Kris will be here in a moment. And, I saw a bunch of people talking about the milk, and I agree. There is going to be milk tonight. In fact, a lot of people have a nice pint at night. Pints of chocolate milk, going dark side tonight. Oh, whoa. Somebody took me up on a movie recommendation. Mr. Robert, for those of you who haven't seen it, I will say the 1996 HBO original of Gotti was incredible. It was incredible. It's one of the best mob movies ever made. I really believe that if you have not seen it, go watch it. It's incredible. So tonight, we're going to be discussing a little company that's gone under the radar. You've heard me discuss it on other episodes briefly. Tonight, I'm going to be doing a deep dive on QXO. I believe Kris wants to do a dive on QXO, and I think he's going to want to talk about another stock as well. So, give Kris a minute or so. Hope everybody's doing well tonight, and please keep in mind, anything that I discuss tonight, anything that Kris discusses tonight, we are not financial advisors. Please take everything with a grain of salt. This is research purposes only. We just do a ridiculous amount of research and would like to make that research public. And whatever you choose to do with it is your choice, not ours. So there you go. Yeah, I agree. PLTR earnings were incredible. I'll be doing a deep dive on that this week. BMNR, look, we all know it's going to be really freaking volatile. So that's something that can do anything in the short term. I'm probably going to end up doing a full-blown video on a combination of Ethereum and BMNR. So that'll probably be at some point this week. I'm not sure when, but I'll be putting that out. Buy the dips. I mean, listen, buying dips is nice. I like sales, I like sales. Even more than sales, I like milk. What can I say? Ice cold milk is freaking great. I don't know. If you don't like milk, I don't know. Maybe I'm just wired a little differently. Why is my hair always perfect? Trust me, my hair is not always perfect. I actually need to get a haircut. I need to start taking my haircuts more seriously. It is getting ridiculously long. I feel like I just got a freaking haircut. I will say, though, I think that it's going to be a strong end to the year. And when I look at the backlog from Amazon, Alphabet, and Microsoft, I got to tell you, 700 billion of backlog in cloud is huge. It's huge. So to me, that just says that this is not something that's going away. And that's not CapEx. That's companies contracting for future cloud services from these companies. So there's a lot of demand for cloud and generative AI. I'm really happy. Yeah, I don't have the numbers in front of me, but if I remember the numbers, it's 390 for Microsoft, 200 for Amazon, and 155 for Alphabet.
Sup, dude?
Good evening, Kris. How are you?
I am good. I was just on a call right before this, and then I was trying to log into Twitter, but I couldn't because stupid Twitter has like dual factor authentication, and sometimes like if you try to log in too many times, it ends up doing this like suspicious login detected, whatever. So I couldn't log in. So I was like trying to tell you, like, can you send me the link on WhatsApp?
Oh, I didn't even
know.
see it. I'm sorry.
No, it's all good. It's all good. Yeah, man. Just feeling a little bit under the weather, but I'm good.
Under the weather, go start banging out some emergencies.
No, man, I'm all right.
Dude, that stuff's amazing.
Yeah, it's just a lot of vitamin C all in one shot.
Oh,
So.
what? Whatever doesn't get absorbed, you freaking piss out. It's great.
Yeah.
All right. So I would like to go through QXO tonight. And if you want to go through anything else, we can. So I put together a bunch of stuff. So what would you like to do? Are you planning on any other companies tonight? You want to do a deep dive on QXO?
I think we could do a deep dive on QXO. And then if we have some time, maybe do some macro.
Sure.
I think right now I'm seeing some things that could be good for us in the short to medium term with some Santa Claus rally kind of situation. But I think next year we're headed towards a really low interest rate environment, man. You know, it's going to be one of those times where I think inflation is starting to come down, but a lot of people don't want to admit it. I think some of the data that you're seeing on the good side is a little bit wonky in that people are saying, oh, well, goods inflation. But then every company that I'm looking at, major company, is in this position where they're starting to get pressure, where the consumer weakness is kind of eating into their fundamentals. So, you know, consumers can only pay so much before they start to just rebel. And so if you look at a lot of these companies that are basically down multi-year lows, there's a reason for that. So we can go over some of that stuff. So let's talk about QXO.
All right, so I'm going to set it up. I'm going to go through a bunch of stuff, and I'm going to ask you some questions. So before I go into the deep dive on QXO, I want to set the stage with something. So I went through the Toll Brothers investment deck because I had a sneaky suspicion they'd have something in there that I wasn't able to find somewhere else, and they had exactly what I am looking for. Just give me one sec. All right, so QXO is a company that is looking to overhaul the building supply industry. And when I look at building supply industry, I want to look at Toll Brothers as one of the largest builders in the US. And the existing housing stock is aging. The average median age of a home in the US is 44 years as of 2023 research. Now, 44 years is quite old and prime for needing new roofs, new shingles, window repairs, just a lot of exterior repairs. And we are in a shortage of houses, which is critical because as the rates come down, as Kris alluded to, and if we really are in a lower rate environment next year, we could see the home builders ramp up their building because the cost of capital is much cheaper. Okay. So now I'm going to go through a bunch of stuff. I have a lot of notes, so I'm going to be jumping around a little bit, and I'm going to keep the slideshow. I pulled a bunch of stuff from the QXO investor deck. So QXO is led by Brad Jacobs, and he's had a career that spanned roughly 500 M&A transactions. He's created 8 companies, of which 6 went public. The 3 most notable ones were United Waste Systems, United Rentals, and XPO Logistics. And he built those into conglomerates. He's made it clear that QXO is looking to achieve a $50 billion a year annual run rate on revenue within a decade. And he's going to be taking a technological lagging industry and transforming it through M&A transactions and organic growth and overhauling the technology platform. So QXO recently acquired, I believe it was in April, Beacon Roof and Supply. And I'll have a slide on them in a little bit. And this is their foundational asset. So I might as well just go to the Beacon slide now. So Beacon did almost 10 billion in sales last year, has 110,000 customers, 600 branches, and they carry 135,000 SKUs. And they are across all 50 states and 7 Canadian provinces. So through this created the largest publicly traded distributor of roofing and complementary products. Now, the way that Brad Jacobs has built these companies, okay? United Waste Systems started his career and cut his teeth from 1989 to 97. United Rentals, 97 to 2007. And then XPO Logistics, 2011 to current. So United Waste Systems is where he started his M&A roll-up strategy. And he started by consolidating small regional waste haulers and landfills and built the 5th largest solid waste company in North America. From 1992, when it IPO'd, to the $2.5 billion sale 5 years later, he delivered a 55% CAGR for shareholders, which is incredible. He did it again with United Rentals, where it became the world's largest equipment and rental provider in 13 months. And they did 250 acquisitions to build that company out. And then XPO started with a $150 million investment, and he built it into a top 10 global logistics provider. Revenue scaled, and this is why I really do believe that they're going to pull this off. He scaled the revenue from 175 million to 15 billion in 4 years. So he's targeting, and I believe some of it is on this slide, the building products distribution industry, because it has an 800 billion total addressable market in North America. There's over 7,000 distributors in North America and 13,000 in Europe, with many smaller companies in this sector that have capital constraints and archaic technological systems. So that's perfect for the Brad Jacobs model, given his pedigree of acquiring to gain efficiency, economies of scale, and margin. And right now, the e-commerce penetration in this sector is only 5%, which is a fraction of other business-to-business sectors. There's also roughly 7.2 million homes in a shortage in the US. So there's a huge opportunity. Now, QXO was formed via a $1 billion investment led by Brad Jacobs' private equity company into a public shell company, Silver Sun Technologies. It came public through a reverse merger, and reverse merger was cost-effective alternative to an IPO. And they acquired Beacon for $11 billion through a mix of debt and equity, which included $2.25 billion in senior secured notes and $830 million in private equity placement. After the acquisition, they continued to access the capital markets and raised another $4.9 billion in debt and $4.8 billion in equity. Less than 2 months after closing the acquisition for Beacon, he then launched an unsolicited $5 billion all-cash offer for GMS Inc., which is a leading distributor of interior building products.
Okay, Steven, this is just me saying this.
Yep.
As much as I'd like to just rehash and I'm sure that the viewers would love just rehashing what's on the screen, let's just quickly go over the big talking points and just make a thesis behind it, outside of just trying to rationalize the numbers. The rationalizing the numbers is something that people can do on their own. Let's just go right to the meat and potatoes of it.
Sure.
What is the business model that these guys, what has the CEO done in the past to basically make a very profitable business that's very shareholder accretive? And what does he see in the current market that is not available that he's going to do the exact same thing on? So clearly he sees that there are industries that are completely disconnected, that, once you kind of structure them together, you can create an economy of scale, strip out costs, unify everything, and then build shareholder value that way, right? That's essentially the plan for here, right?
Yeah. So what they're looking to do is scale this company, and Beacon's their foundational asset. So he's basically going to acquire a ton of other companies to scale this to a $50 billion revenue company. You also are doing this at a time when there is so much capital going into data centers and the build out for data centers. And he's not sticking to roofing. This is just his foundational platform. He's moving to interior, and he's going to have other sides of the market. So he'll be able to do everything from the bricks to the interior to the roofing. And when you think about Toll Brothers and the other housing companies, the shortage of houses in America and incremental weather causing people to have to create upgrades to their homes, replace roofs, and then the builders increasing their actual build next year, he's looking to corner the market and become the de facto supplier to contractors.
Basically, basically become the Amazon of the supply, like the housing supply contractor world, right? So if you're a contractor, you're basically going to be able to log into Amazon and just get whatever you need to, right? And because you have a pre-existing relationship with all of these suppliers, you can squeeze margins from those, because basically when you get enough scale, like if you look at Amazon right now, a lot of people love Amazon. But one of the things that Amazon does is squeeze suppliers, right? They said, look, if you want access to our platform, you are going to have to give our consumers the best pricing possible. And you're going to have to accept certain things. So everyone ends up saying, you know what? I'm willing to take a 25% margin hit as long as I have access to the most broadly used platform in the industry, right? So essentially, that's what he's trying to do, I'm guessing.
Yeah, and one of the big points is he's putting a lot of capital behind technology to build an AI platform for pricing to overhaul their procurement, supply chain, and make sure that everything is automatic with best prices for region, et cetera, et cetera. And that will also allow him to cut down on leakage in addition to creating additional margin as he brings these other companies on, because having this system already built strips away the costs after an acquisition on the other company's side, because they get to cancel all those contracts and just load them right into their system. And Beacon already has a foothold in 50 states. So every acquisition he does is going to be very accretive to earnings.
Yeah. I mean, that makes total sense. I mean, you think about it this way. If you're a local distributor, you're not going to pay hundreds of thousands of dollars to create a website and maintain the website and do all this other stuff. The same thing with, and there are companies that do that right now. There are tons of distributors right now that have their own websites and they have their own distribution channels. But at the same time, if you're a contractor, you're not like, let me go to Joe Schmo's website and then let me go to Steve's website and let me then go to Chris's website and get order 1, 2, 3 things. You're just like, hey, listen, I want to just go add to cart, boom, ready to go. It gets delivered to me and I can start my project. And then also, if you have people that utilize the platform, now you've got this history, right? You could say, well, which nails did I use last year on this project? Because those worked really well. You could just go to your app, go to your history, order it again, and there you go. Now you've got the nails you wanted, right? So I think this is great. I mean, this is the kind of business that people don't necessarily want to get engaged in, because there's a lot of legwork that's required to build these things out. And you also need a lot of capital. See, like, you could be the best distributor in Georgia and say, you know what, I want to expand to Florida and I want to expand to North Carolina. But at the same time, now all of a sudden you need capital to expand out and do this. This guy seems like he's a born capital. He can raise capital. I mean, because of his successful track record, he could probably raise it at prices that are substantially less than what the current going market rate is for any other distributor. So he's basically just using his economies of scale to beat the crap out of all his competitors, consolidate the industry. And now all of a sudden you got yourself he's literally running the same playbook that he did with waste management.
And think about this. His last venture was freaking XPO Logistics. And what is that? Last mile freight. You think he's not tapping into that for his network also?
Yeah.
I mean, he's got a lot of verticals. Morgan Stanley just initiated coverage with an overweight rating. And KeyBank Capital Markets just instituted research coverage on the entire U.S. Building Products Distribution Center, they highlighted QXO with a 28 price target to start.
Yeah. See, the one thing I'll say about price targets for companies like this, I don't necessarily trust them, only because there's no real fundamentals that you can go by, just other than the roll-ups that he's doing right now, right? Like, yeah, you could say, oh, the value of this roll-up is X, and no, this is literally going to be basically execution. The better the company executes, the more profits this company generates. The more profits, they can reinvest that into acquiring more businesses, and those businesses are value accretive, and you can strip costs too. I guess that's the other thing too. Like,
Yep.
you can make things that you acquire more efficient and raise the margin over time. The question that I have for you is, what is the time horizon on this thing for you? Is it 1 year, 2 years, 3 years, 5 years? Because to me, I'm looking at this and it's like 5.
Yeah, 3 to 5.
Years.
And here's why. So he says he wants to get a 50 billion revenue within a decade.
Yeah.
And when I look at the market cap, it's 11.9 billion. So if he just gets a 1-to-1 sales ratio, I mean, that's a 4.5x right there.
Yeah.
And I think he's sandbagging. I think he's going to get there in 3 to 5 years. I don't think he's going to get there in 10 years. And I think that as rates come down, he'll be able to borrow at better rates. Why is Matt still awake?
I think he's in Europe.
He is. That's why I'm saying, why is he still awake? It's like freaking 1 or 2 a.m. where he is. But anyway, Matt, you need your sleep. Probably had too many teen crumpets. But anyway, for me, it's a 3 to 5 year hold because I think that this is a stock that can grow through acquisitions, grow organically, expand margin, maybe get a little bit of a multiple. And I think that 2026 back half and 2027 may become a market where we see maybe not necessarily capital roll out of tech and into the broad market, but I think the capital that's going to come back into the market will go into the broad market, because if it was going into tech, it would have went in there already. And I think that this is something that will be attractive. And if we get more incremental weather, which it just seems like things are intensifying, and we get a lot of people doing projects on homes, hiring contractors, and more building, this should do very, very well. And that's really my growth thesis, just looking at the macro and what's probably going to happen in a lower rate environment.
Yeah, not to mention there's so many people that are in their current house situation that they're not going to sell ever, because they're just, the mortgages that they have are so attractive that if anything, that if they really need the space, they'll just do renovations, right? So like, let's say right now, like I have a 4-bedroom home and I need a 5th bedroom, and I have an unfinished basement. I'm not going to say, well, let me sell this 4-bedroom house and get a new house. Like sometimes they did in the past. They'll just say, well, maybe I'll just finish my basement, right? In which case now you're just basically investing some money and getting the space you wanted. So I think there's a combination. I do think that there's value there. I do think that okay. The one thing I'll say is I don't think we have necessarily a housing shortage per se. I think there's enough housing out there, but I think a lot of the housing that used to exist that was primarily for just the home like shelter market for people is actually been converted now to short-term rentals and to rentals. So in that case, that's what's kind of causing this situation where the existing supply has transitioned to non-primary shelter use cases. And so, I don't know, like I'm looking at this whole industry and I do see it being a growth vector. The only thing I would say is next couple of years, I think home price, actually maybe not even next couple, I think the next 5 years, home prices are likely to just stay flat for the next 5 years. What do you think about that?
I think that a lot of people are being priced out of areas. I think home prices in a lot of areas don't make sense. And I think they're too high already. And traditionally, homes have gradually increased, but I think at this point they've increased to a level that don't make sense for most people. And when I see, and I get it, inflation, cost of capital, value of a dollar, I understand all the arguments. At the end of the day, in areas that I see near me. The price of a starter home does not make sense.
Yeah.
The price of your typical 3-bed, 2-bath, or 4-bed, 2-bath does not make sense in many areas. And I don't think that the prices of housing is sustainable right now, because not just that, you have the taxes going up, you got everything else. So I do think that there is going to be more building outside of the heavily populated areas. We'll see. Also, one of the things that I do believe also, new housing is just more attractive. And if you're in, let's just use Pennsylvania as a, for instance, because there's more land and more areas to build than in New York. Okay. You're in Pennsylvania, and if you can build a new house for 500 grand, or buy one that was built in the 60s or 70s for 450, I think a lot of people are going to spend the extra 50 because you're getting the mortgage to build it anyway. So you have new construction. And look, a lot of homes were built in the 20s, 30s, and 40s also. So
Yeah.
I do think that we're going to see in a lot of those areas building start to tick up, because from a cost perspective, it just makes sense to build new.
Yeah, makes sense. There are definitely places where I've seen some really nice home, like some nice building sites here in Georgia that I'm like, yeah, I don't want the house, but that land is amazing, you know? So I'm like, what would be the cost of just building a new on top of whatever that's out there? And the thing is, believe it or not, the cost of building is not necessarily even that much more expensive than buying a existing home that's 40, 50 years old, but now requires all sorts of maintenance over the next like 15, 20 years. So my thinking is, well, if I could just maybe get a home that's more brand newer, yes, I'm paying a little bit upfront in premium. It just means that I have less to deal with for the next 10, 15 years in terms of maintenance issues, right? So if I buy,
Minimum.
let's say, a 30, 40-year-old home, first of all, the roof is definitely something you're never going to find. I mean, it's rare to find a home with brand new roof, but let's say a brand new roof is about, depending on the size, could be anywhere between 15 and 25,000, maybe even more, depending on the kind of materials you use. And then you look at all the piping and all the electrical stuff. All of those things at some point is going to have problems. Same thing with HVAC units. So, like when you're buying something brand new, it could end up working out. Now, the one thing I'll tell you, like buying a brand new home, I just hate like how they're building all these houses right now. Like they all got these like stupid not row houses, but
I know what you mean.
basically instead of like a nice like cul-de-sac with like 4 homes, it's like literally just one straight line of homes straight.
And they all look the same.
Yeah, they all look the same. They have
They
the
all
same
look the same.
layout.
It's so annoying.
I saw this one home with the wife not too long ago, and it was a really expensive house. And I was like, I went to one of the bathrooms and I looked outside, there's a window there. And I'm like, looked outside, and it was literally staring into like the neighbor's home. Right. I'm like, yeah, you're going to charge like this much for a home that doesn't even have that much privacy or land or anything. It's kind of ridiculous. But I think what it is a lot of those homes were built, and believe it or not, a lot of those homes are being marked down significantly right now because no one's buying them. They were built in 2021, 2022, when there was such a frenzy for buying that a lot of these builders they were just throwing these homes up, man. And a lot of the quality in these new homes is not that great either. So I don't know.
It's interesting to see what happens. And I have another theory that he's going to go into other verticals than just building products. And he could go into HVAC. He could go into electrical supplies. He could go into these things to augment, because as you said, what does every home need? Piping, electric. He could add those verticals and become a de facto distributor for plumbers and electricians also, one foul swoop.
Yeah. I don't know, man. I'm looking at like the economy transitioning right now. I see a lot of young people. I feel bad for the young people because they got told, in the year 2000, oh, you need to go into banking, right? Because that's where the money is. And then they go into banking, and then the great financial crisis comes. And then everyone's told for the next like 10, 15 years, you need to learn how to code, Remember that? Like learn to code.
Learn
And
to
then now all
code?
of a sudden, and then AI comes along and now it's like, what? So now everyone's saying learn to weld and learn to do things with your hands. So it's kind of, I feel bad. Like a lot of these people, it's just constantly moving the goalposts. Every time they get to somewhere, the goalpost moves in another direction. So
I got a whole take on the educational system. I got a whole take on what you just said. Look, I've said it for a long time. I dislike the educational system from the ground up. I am one of those people that does not believe half the stuff that you're taught in high school is relevant, if not more. And I'm getting more vocal about it. I mean, look, unless you want to be a scientist, there's zero reason for anybody to take chemistry. I'm sorry, there's just zero reason. There's none. I didn't take chem. I dropped out of it. I didn't
well,
take it.
no, I think the look, to a certain degree, learning these new traits is good because you get to explore something that's going to interest you, right? So for me, let's say, use me as an example. I went to Stony Brook. My degree is in biochemistry. Okay.
Yep.
I did not enjoy that. That was not where I wanted to be. And I ended up working at a pharmaceutical company. It wasn't for me, right? But the thing is, like, if I had never been exposed to that, I never would have understood that that's where I could have been. Like, no one at the age of 18 knows what they're going to be for the rest of their life. A lot of life is just exploring things and, and trying things out. And unfortunately, our educational system can't be 100% perfect where they give you an assigned task. I mean, what's your background? Like, did you know that you were going to be in your current role, like when you were like 16 years old?
So this is what I'll tell you.
Mm-hmm.
I knew what I didn't want to sit through.
Mm-hmm.
And I can tell you that most of high school, most of college was not for me.
Mm-hmm.
Sure, do I have an undergrad in economics and do I have an MBA? Yes. But could I have learned more from certain things on YouTube than that? Absolutely. And at the end of the day, they should be focusing on financial literacy above everything else in high school, because how dare we allow 18-year-olds to come out and sign up for student debt and sign up for credit cards without making them financially literate? And that is, to me, is way more important than half of the stuff that they make you take in high school. It's ridiculous. I mean, the fact that people can come out and sign up for 150, 200, 250 grand of student debt is crazy without ever being financially literate or signing up for, like, think about it. There's people in high school that turn 18 a couple of months into their senior year. They can go sign up for a credit card at 25, 30% interest and not even know how to use it. So it just makes me really angry that financial literacy is not a cornerstone of the educational system. And that's why I pick on things like chem or physics, because most people, or calculus, because physics may not be a good one, but calculus and freaking chem, most people will never use that.
I'll tell you,
literacy should be a cornerstone.
So I took AP bio, and then like during college, I ended up taking a lot of biology class, and there's like a biostatistics class that I ended up taking. And you know what the best thing I learned in that class was? How to use Excel. Like I have like right now, I'm like the Excel guru at my jobs. Like my boss right now, if there's any project that needs any spreadsheet work, he'll just say assign it to me, because he knows like I'll do it in a very simple way. So I'll give an example. We have like thousands of pieces of equipment in our inventory, and we have that from Dell. And the thing is, we have all the host names, and then we have all the serial numbers, but like somewhere along the line, someone lost where the warranty data was for each and every single one of those workstations. And so they're like, hey, Kris, can you get all the data for us? And you could take like a month. And I was like, I don't need a month. Just give me the spreadsheet. And then Dell has this command tool that lets that you can upload like a batch serial numbers, and basically it'll give you the warranty status on every single one of them. And it takes literally like 5 minutes. So it took me like 5 minutes, created a spreadsheet, created this thing. I even did it with conditional formatting, so you could see, and then I use VLOOKUP to basically identify the location where everything was. And then like I ran a whole bunch of things, and I said, he's like, this is why I keep you around, Kris, because for him to learn all that stuff would take a lifetime, but for me it was easy. Now the thing is, I didn't necessarily like go into Excel 101 class in college, even though that probably would have been one of the best investments anyone could make. But it was part of my curriculum, you know, and like I said, there's a lot of things I learned in college that were not necessarily relevant to my current position and field, but it gave me that exposure. Like I took Hinduism 101 from a white guy. Dude, by the way, the white guy, he knew Hinduism better than I did. Amazing teacher. Amazing teacher. I thought it was going to be an easy A for me, right? I was like, bro, I grew up as a Hindu. I should know all of this stuff. And bro, he taught me more about my religion than I knew.
Dude, I'm about to go down the freaking, about to go on the rant of all rants.
Go for it.
The college educational system is worse than the high school system because a bachelor's degree should not be 128 credits.
I agree with that.
I am sorry, but you know what? Making a 18 to 22-year-old student take an art history class or a music class or a cinema class to be well-rounded, I'm sorry, that's a waste of time. A bachelor's degree should be 2.5 years. It does not need to be 128 credits. It needs 70 credits, 75 credits. You don't need to take all that stuff. I was forced to take electives that were like, you're making me watch Citizen Kane for what? Like, I'm sorry, like cinema, you're making me watch Citizen Kane, Gone with the Wind, and something else. Like, stop it. It's ridiculous. And how much are we paying for that? And that's what we are having people go into debt for. It's crazy. It's absolutely crazy. It blows my mind. The whole thing needs to be overhauled.
Yeah. Kris, next time use match and index VLOOKUP as parameters. I'm sorry. By the way, you know, Excel now lets you use Copilot to basically create.
I know. I saw the upgrade. If you have I think it's an E3 or higher license, or maybe it's an E5 or higher, you get Copilot in all of it. It's crazy.
It's pretty cool, man. It's pretty cool. Like right now, like me and you, we're finance guys, right? So whenever we're running spreadsheets, we're running like financials, it is super helpful to have an LLM kind of experience because you can just ask it to do things. So which is really cool. So I will say the use case of AI, especially for someone who's doing financial analysis, is growing by the day. The only thing that I'm a little bit shocked at is that I wonder if more people are not using this because like AI is pretty dumb. Like I have asked ChatGPT, and the thing is, it's actually been proven now that if you just go with a raw LLM and you ask it like, okay, what's a good investment thesis? The LLMs are actually really stupid and they can't do decent fundamental analysis. Have you noticed that? Like they're not good at it.
To be honest with you, I really don't use LLMs much.
Really? No, I have.
I use it for very certain things, like what I sent you about QXO. I had to do that just so I could get the foundation without having to go to 30 different places because it put stuff like that puts together very well. But like I'm using Microsoft Project a lot. I gotta tell you, if you're in any type of project management, Microsoft Project is freaking amazing.
Interesting. I'll show you a use case that I've been using ChatGPT for that's actually really cool. And maybe even people, maybe people even in the chat, you guys will get an appreciation for this. So let me share my screen real quick.
Yep.
So right here. So one of the things, actually, let me just share this. Sorry. Share screen. I have to share entire window. Okay. So here we go. So one of the things that I don't know if you know this, but you can have ChatGPT do is basically give you an alert. Like you can create alerts to basically show you certain things. So I have it so that it runs a daily task for me where it identifies. Let me see, where did it go? But basically what it does, it runs a daily query for any tickers, large caps that are between 20 and $100 billion that are currently sitting below a 5-year RSI of 30. So it's like, give me a list of all the oversold companies in the current market. And it does that. and it literally sends it to me every day, and I can look at it and I'm like, okay, yeah, I didn't know that this company was oversold today, you know? So this way I'm not looking for all the oversold companies. Let me see if I can find one that I have. Fiserv. Because usually when things get really, really oversold, there's typically some things that are overlooked by the market where there's way too much selling. I don't know where to go. Let me see.
Yeah,
Let
I
me see if
haven't really messed around with it to the extent that I should.
Yeah. So like I said, create like this. Create a tracking daily tracking alert.
Dude, you're free.
For,
What you type into this is amazing.
yeah, create a daily tracking alert for companies on well, actually for US listed companies that are currently at a 1-year RSI under 30. Send. So it'll do that, and basically you have to use thinking for it, and so it'll do that, and then it'll ask you right here. So, and it'll create the schedule for you, and every day it just sends it to you, and basically it'll track it right here. So I'll done check it at 9 a.m. every day, alert you with the US listed. Run it for today. And you would just basically allow it, and it'll alert you on your desktop. Run it for today. So if you go ahead and do that, right here, and then you can actually alert it to send it to specific sites if you wanted to. So
interesting. So when are we getting
right here? Look at that. So now, if you want to, like, let's say I'm looking at this, I'm like, oh, look, Fiserv, huh? It's, you know, it's
everybody's
what is the
freaking
current
talking about Fiserv?
I have an entire thesis on Fiserv. I don't know. Do we have the time to do it today?
I would love to hear it because people have been. I started looking into it last night because people kept going off about I need to look at the numbers.
Yeah.
So yes, you can absolutely go down the rabbit hole with me.
All right. So I'll do a really good breakdown right now for Fiserv. So first and foremost, when it comes to Fiserv, I'll start with technicals and then I'll do fundamentals on it. So if you look at this company on let me see, on even like historical on Max, this is the most oversold that it's ever been, right? Look at this giant move down, right? So a lot of overselling. Whenever you see RSIs hitting this low, you could tell that there's definitely fear and panic in the markets. Okay. It's broken through every support level going back until the damn went public. So that's like the first thing. Second, we have to find out why did it drop off so much? So why did it go from almost 235 to now to $65 a share, right? And this is where, you have to remember, and there's a mantra that I think Josh Brown said, and I've adopted for myself, which is fundamentals tell you what to buy, technicals tell you when to buy. So whenever you see something that's technically oversold this much, you know that there's a little bit of panic and fear that may or may not be justified. And a lot of times it's not justified. So we can kind of do a quick analysis. So now that we've identified that this is technically at oversold levels, what's the next step here? All right, so let's take a look at the fundamentals on this. And let me bring up Fiscal AI to do that. So one of the things about this company, they're in the fintech space. Basically, if you've ever been to a community bank, these guys run the tech stacks behind it. It's a legacy system, but they're embedded everywhere. The cost of moving away from Fiserv for a lot of businesses is very, very expensive. They also have two different divisions. One is for their POS side. The other side is their banking technology side. But Fiserv is a combination of two companies. They have the original Fiserv company, and then they acquired another company called First Data. First Data gave them access to a lot of additional opportunities worldwide. So this company does not just operate here in the US. They are a worldwide player. So one of the things that we saw over the last few years is this revenue just kind of exploded to the upside, right? So you can see here revenue was growing around 4.5, 3%. So it's not a high growth business. So the first thing is, if you're valuing this company like a growth business, you're gonna be disappointed. And what sucked about this company is that it was growing its revenues at a pretty decent clip. So you can see here the revenue CAGR, especially the last, let me just go back to 2021 post-merger. The revenue was growing around a 7.5% CAGR, like, and they had projected, they guided to almost 10% growth going forward. So if you see their revenue change was kind of like normalizing, but then last quarter they had an absolutely terrible quarter for growth. So let me just bring that up. So before they were growing, and then last quarter they went from 8% growth to 0.9%. So this is bad. Whenever you see a company go from growth to non-growth, your PE is going to be extremely rolled back. What do you think the PE on this company was last year?
I have no idea. 50?
The PE on this company last year, let me see right here, was close to 20.
Hold on.
Yeah.
I am eating panna cotta. Listen, you need to send me some panna cotta, okay? That just sounds amazing right now. A little caramel on top, forget it.
So historically, before their merger, their PE was about a 28, right? They're super cash flow. They generate a lot of cash flow, and they utilize that cash flow mostly for share buybacks. So you can see here, pre this sell-off, PE was around 33. It kind of went down sometimes to like the 23s, but it roughly stayed in the 20s. And last year, at its quote unquote apex post merger with First Data, it was almost 43. So when you see a business like this, you're expecting, like, wait a second, no, the growth on this thing must be insane, right? And a lot of their growth here in terms of PE multiple expansion was driven by a ton of share buybacks. So what essentially they did, if you look at their margins, their operating margin, or their EBITDA margin actually, their EBITDA margin has been almost like 42%. So they have a lot of money that they can convert into free cash flow. And they utilize that free cash flow. Let me just bring that up. Sorry. Free cash flow to buy back shares at a very, very brisk pace. Now, let me just go to cash flow statement. Right here. Net issuance, long-term debt, cash from financing activities, free cash flow. So
guys, while Kris is going through this, please go follow him on X and go follow him and Matt on Cash Flow Chronicles on YouTube, please. They put out great content.
Okay. So if you see here, this is their free cash flow, right? And this is how much they're doing in share repurchases every quarter. Now, let me just make it a 12-month trailing, and it'll help. So you can see here at its apex, they were generating about $5 billion of free cash flow. Of that, they were using almost 5.8 of it to buy back shares, right? So they were taking on certain debt in order to repurchase shares on top of their CapEx and everything else. So their debt started to kind of go in upward direction. Now, the thing is, a lot of people, and we were talking about this earlier, incurring debt is not a problem as long as you can service the debt. And you can clearly see that they have a lot of free cash flow, so they can service that debt pretty easily. The cost of capital for these guys, if you look at their debt, is like 5%, 6%, right? So you can see here the maturities on their current debt. Let me see what their earliest thing is. Where is it? Right here. They have a bunch of bonds that are 4.5, 4 point this, 5, 4.2. These things aren't expiring anytime soon. So they're pretty much up there. So just from a debt analysis standpoint, they only have about $3 billion of debt coming due in the next 2 years. But their free cash flow is pretty insane. So what were they doing? They were buying back a ton of shares. So you can see here that last year they bought back almost $7 billion in shares. That explodes your EPS. So let's look at their EPS. Okay, diluted EPS. And let's just hide. Look at that EPS growth. In 2022, they were earning $2.06 per share. Last quarter, they earned $6.05. They were guiding this year with their previous leadership team that they were going to do $10 in earnings because they were going to use so much of their free cash flow to keep buying back their shares. So if you're telling me you can find a company that has literally the ability to grow their EPS this much, that is pretty insane, right? So a lot of people are looking at this company saying, I need to buy in. And that's why the stock went from, sorry, I didn't mean to do stock price change. Let me just get rid of that. Okay, there we go. And let me just toggle this as a separate thing. So as you can see, the earnings were exploding. So on this way from 2.6 to 5.8, look at the share price. The share price went from $88 to almost $235. The question that everyone should be asking yourselves, how does a company go from nice flat margins that's growing at a decent pace, start going absolutely berserk in their earnings? Well, number one, they were stripping out certain things that they should not have been stripping out in terms of cost. So instead of reinvesting in the business, they were like, well, you know what? Let's just keep buying back our own shares, right? So what happens? The quality of your products tends to deteriorate. These guys, they had such a big presence in the field that they felt like they were untouchable. That left the door open for competitors like Toast to come in and create products at prices that were a lot less than what these guys were doing. And their last CEO, basically, he was already on, like, his foot was out the door. So he was trying to do everything possible to get the shares up as much as he could. And so a lot of their free cash flow, a lot of the money that the business can basically generate, if you don't reinvest it back into yourself, you're going to invite competitors to come in and mess with you. So Fiserv, because of its market advantage of just how big it is, it was like, yeah, we don't need to really invest so much into our tech stack as much. And the other thing is they kept raising prices on their clients. So consumers, if you keep raising prices on your consumers, yes, it's good for the business short term, but long term, what does that do? Like if you right now are selling the best milkshakes in New York City, Stephen, if you keep raising the prices every year by 10%,
selling them to me. Okay.
Yeah, but I'm saying after about 10 years, after about 3-4 years, and you've raised the price now from $10 a milkshake to $20 a milkshake, eventually customers are going to get fed up and said, look, man, as great as your milkshake is, I am going to try a competitor, right? It's just not normal. That's a natural thing, right? New CEO comes along. The old CEO leaves. New CEO comes along. He looks at the business and he's like, holy shit, what the F is going on here? Like, we're bleeding market share. We have some one-time benefits from Argentina that are no longer there. We haven't invested in our tech stack. Our competitors are coming in and just destroying are basically gaining market share. What are we going to do? And the problem is the company's valuation had this crazy growth expectation built in. So what does he do? He comes in and just says the truth. And he says, look, guys, we are not going to be growing as fast as we were. We are going to try to have a more sustainable growth strategy. We're going to reinvest some of our free cash flow actually into the business itself. We have a dominant market share right now, but we don't want to lose that lead because of short-term moves. And this is where the market looked at this and said, holy shit, they just lowered their guidance from $8 for this year to now $10 to $8. And next year, it could be even less. It could be probably $7, depending on how things go. So if you see that kind of erosion in EPS, you're not going to be giving it a 20 PE. You're going to give it what? Like a 10 PE, right? For a company like this. This is the challenge that these guys have run into. The problem is they might have been a little bit too conservative with their guidance, and now their PE literally went from its traditional 20s to now about 10. So you have a very strong fintech company with a lot of good assets trading at historically low multiples. Now, the opportunity for investors, I'm sorry to say this for investors that bought last year, sorry, you're basically be sitting on this for quite some time. But anyone new, your basis is actually very low. This company's current market cap is about 35 billion, roughly, with 20 billion in debt. Don't get me wrong, debt is not a good thing. Debt is always going to be there, but the multiple is absolutely crushed now. So there is a potential for mean reversion in this company that gets to a good solid foundation, especially if a lot of the investments that they do make end up working out. A couple of things that were highlighted in the earnings call that got me interested. Number one, their ability to generate free cash flow has not gone down. So yes, they're not going to be growing as fast as they were in the past, but it's not like their free cash flow just disappeared all of a sudden. Their free cash flow is still going to be there. And at $60 a share or $66 a share, the value of the future buybacks is going to be exceptional for them. So if you keep the same amount of free cash flow, and they by the way, they also mentioned that they're not going to be changing up their capital deployment allocation strategy. They're going to keep their buybacks intact, but just not grow their share buybacks nearly as much. With a current PE of 10, it's pretty good value. And then on top of it, they're moving their listing from I think S&P to NASDAQ, because they're like, look, we're a NASDAQ company. We should be in the NASDAQ. So starting November 15th, they're going to end up in NASDAQ. So, like I said, the value of this company is them getting back to where they're supposed to be in terms of business. They're going to be a lot more consumer focused. They're going to be consumer centric, and they're going to hopefully stop bleeding market share to competitors. So their growth rate is still there, but it's not the extended growth rate that the original management team was asking for. The other thing that I really like is a lot of the changes that they've made at the board level and at the C-suite level are known operators who've had experience before, and they're all BlackRock lackeys, by the way. So Larry Fink's hands are all over this thing. So yeah. So I think Fiserv, if anyone here in the chat has worked at any bank, you guys know exactly who Fiserv is. These guys are not going anywhere. They've got a pretty durable moat. The cost of switching away from Fiserv is very expensive. So most organizations are not going to do it. They are refocusing their attention on their consumers and pricing. And, does that mean that they're going to have to take some short-term pain? Yeah, absolutely. And that's going to limit their growth. But it also means that this is going to be a setup for a nice, long, durable business from here until however long you want to go. The other thing is structurally, the industry is growing, right? So if you look at the payments markets, cash is a thing of the past. Everyone in the world right now is moving to cashless. So you kind of need this infrastructure backbone and technology backbone to support that transition outside of just the US. So like recently, they just signed a deal with Nubank So that's one good thing. So they're still getting market wins here and there, but you really have to deep dive into their business to understand where these guys could be. Now, what's interesting is a lot of super investors, quote unquote value investors, they were buying this company. It was actually one of the most bought companies in Q3 of 2025, right behind United Health. Look at that. So a lot of guys, especially what's his name, Seth Klarman, he bought a good amount in Fiserv. He might have done it a little too early, but if you think about it, you're getting a better deal than Seth Klarman did. So there's that. You know. Yeah.
I mean, you're making a good freaking case.
I mean, the key to this is this should have been valued closer to somewhere between a tech company and a bank, right? So if you look at a bank, banks are like what, 10 PE, right? On the other hand, if you look at like a fintech, you're looking at a 20 PE. So this thing at a 15 PE is reasonable, which is what most analysts are going to target this thing. So if you think about their earnings, I did a calculation. I'm looking at about $9 in earnings by 2028. $9 times 15. There you go. That's your price target. So where is it here? That's where you're going to get to. You know, I saw Dodge and Cox Fund bought it. Yeah. A lot of value investors, they bought this thing because a lot of them are just purely looking at the EPS growth from the share buybacks. And so I think the key here for anyone looking to get into this position is, how are they going to be able to kind of stem the expenses, and basically get to a point where they're regrowing the business at a pace that's sustainable, right? You never want to invest in a business that has unsustainable growth to the upside in one shot, and then you've got a decade worth of declining growth, and then you're going to be valued like a what is it called, like a value company. So if you're asking me, Kris, would you rather have 2 years of 100% growth and then everything tapers down, or would you rather have 15% compounded for the next 10 years? A clear example is something like Salesforce. Salesforce has been growing their EPS 20% year over year for 2 decades. That is what you want. That's how you build long-term shareholder value. So, yeah.
So, I think Salesforce is undervalued.
Yeah. Well, the thing is, their growth is slowed down. So that's the challenge, man.
Right. It's also a lot harder to grow when you're a 40
yeah.
billion revenue company.
Yeah, some people in the chat are saying chart is straight down knife. I agree, man. But this goes right back into the saying that we all have to remember, buy when there's blood in the water, when things get oversold. And that's the other thing too. I don't think that these guys should be worth $200, but I also don't think that they should be worth $50, $60. I think $100 price target on these guys is not bad, considering just how much free cash flow they generate relative to their market cap. Yes, is the debt a problem? To some degree, the debt is an issue, but a couple of years of using free cash flow to buy back pay down some of the debt, and now your debt to EBITDA is like 3, which is not insane. Like debt to EBITDA of 3 is like whatever,
Have you seen how much free cash flow freaking Pfizer is putting off right now?
I am not a big fan of Pfizer, only because I have a really terrible track record with pharma. I really need to just keep my nose out of pharma, man. I'm getting absolutely murdered right now in Novo Nordisk because
the two that I'm in for the dividend is Pfizer and Bristol Myers. Pfizer's dividend 7%. It's crazy. Kris, they are doing $13 billion in free cash flow.
What's the market cap? 140 billion. Look, man, when it comes to these pharma companies, I don't know how Trump is gonna do his thing. and there's a lot of geopolitical risk, and also like I don't know what their patent expiration timeline looks like. There's so many things to investing in pharma that are, I don't know, if you're not a pharma investor, like who knows the ins and outs of every drug and when they go off patent, and then also like medical billing and coding and how that's going to impact them. I don't know. Like drug companies right now are absolutely getting demolished by this focus on healthcare spending. So
Let
I
me
don't know
ask
if I
you,
really want to be.
where
Yeah.
are you on genomics?
I'm not in genomics. I don't care for the sector.
I think with all the AI advancements, something's going to happen with genomics. I know nothing about the sector though.
Yeah. Someone said Pfizer made a deal with Trump for Trump RX. Yeah, but I don't know what the margin is going to look like on Trump RX. You know.
Yeah,
So,
look,
I
the
don't
only
know.
reason I'm in it is for the dividend, and I think it's undervalued based on their free cash flow. So I like the numbers on Pfizer and BMY. I don't own a lot, but I have them for the dividends.
Steve and Chris, have you seen the proposed 2-year ACA plan? I have not. I was actually about to look at that right before I joined this. But any thawing of ACA subsidy extension plans could send Oscar, Molina, maybe not so much Molina, but Oscar up significantly. Because Oscar is pure play ACA. So I don't know. Let's take a look.
When I did my research on Oscar over the summer, I felt that they were very undervalued based on what their policy benefits were to how much income they bring in from the policies. I mean, there was a huge spread there.
Okay. By the way, I don't know if you know this, but you know the CEO of Oscar, which board he's in charge of now?
Which board?
Verizon. He's the chair. He's the chair.
Interesting.
Yeah. He's the chairman of their board now. So we'll see what
You got
happens.
a new board chair, new CEO.
Yeah. Well, the new CEO, Dan Schulman, he's on like this warpath of getting like stopping churn and getting customers back. And I
Yeah.
think the plan that he outlined is actually something that Verizon needed to do. They've already built out their infrastructure with 5G now. So now they can really concentrate on their convergence strategy. So I think there's some value there also. So yeah.
Interesting. Yeah, look, you know that I'm a big fan of Verizon. I think it's a misunderstood company. People are not necessarily looking at the amount of EBITDA they generate versus the debt. They generate close to 50 billion in EBITDA. They have more than enough capital to service the debt. So
Yeah.
I'm really not worried about it.
Yeah. Yeah, I'm going to have to, I know someone in the comments, like, sorry, I'm going to have to look at this proposal. Sorry, I can't log into Twitter right now, but Congress is gridlocked. Too many Americans lost. Whatever. I'll read it later. But eventually they're going to resolve this.
Well, look at this. It's a Kushner play. You don't have to do any other DD. Guess what else is a Kushner play?
Wait, what it?
QXO. Kushner's
I'm
on
pretty
the
sure
board.
that's what he meant. I'm pretty sure
I
that's
thought
what
he meant. No, he means Oscar. Oscar's a Kushner play. Also.
Well, the thing is, Oscar is not Jared Kushner. That's like one of the other Kushners.
Right.
Yeah.
Yeah, but QXO, Kushner's on the board, and he has a pretty sizable investment.
Someone said, Chris, are you still in BMNR? Yes, I am. Me and Steve are both on BMNR. We are Ethereum bulls. We think that stablecoin legislation and the amount of stablecoin volumes is going to go higher, and Ethereum is going to be one of the beneficiaries. And BMNR has a strategy that they're going to do as much as they can to accumulate. I think eventually they're going to announce staking, which is like nice 2-3% in cash flow for them that they don't have to do much on. They're going to do some side projects. Now, I will be honest and transparent and say that I don't have a purely naked long call position on it. I do have a lot of hedges to the upside and to the downside. So I'm milking the volatility on BMNR. BMNR is the easiest milkable play in the market right now. So I'm milking the volatility. So a lot of people are willing to overlook this crazy IV and sell. And so I'm selling options also on BMR. So just putting that out there.
SoFi up 3.2% today.
On what?
I don't know. I don't know.
Yeah.
Very happy with SoFi earnings, though.
Yeah. Let's see. China's up. But yeah, dude, ASTS is down 11%. Nebius is down almost 10%. What the hell happened? I think this is just November jitters. Eventually, all of this stuff will rally in Santa Claus time. So, shoot, Royal Caribbean is down. Norwegian's down. Here's a question to you, Steve, before we stop this. When do you think we are going to rotate from growth to value? Because right now, value is absolutely getting destroyed. Growth is getting every dollar.
I wouldn't say value is getting destroyed, sir.
Are you kidding me? Yes, it is.
Do you not keep up with the trends?
Please.
Do you not keep up with the trends?
Don't say Palantir is a value company. I'll lose it, dude.
I would. Would I do that to you?
Yes. Yeah.
No, I wouldn't. But in all seriousness, everybody keep in mind, this fine gentleman said value's getting crushed. I would like to show you what is considered value in 2025, sir. You ready?
Please.
You ready? Apple, Microsoft, and freaking Amazon are the three largest value stocks in the Spider S&P 500 value ETF, sir. Apple, Microsoft, and Amazon. I'm going to clip this. I got to make a short reel out of this. That was a perfect setup for this.
Microsoft's got a 35 PE. Fucking Amazon's got God knows what PE. And Apple is 30-something PE too, man. How is Apple a value? Apple,
Microsoft, and Amazon are value plays, sir. Last time I checked, they're not getting crushed. Oh, wait. AMD's a value play too these days. Look at that.
How is this possible?
AMD's a value play, sir.
Yeah, I don't know about this whole thing. With value, you're looking at maybe PEs under 10.
I'm just saying that, who are we to say what value is when the spider is telling us this is what value is in 2025?
That's kind of ridiculous, man. And this is not even like actively managed, is it?
No, it's the spider index.
I don't know. This is dumb.
If you can't trust the spider, what can you trust?
Are you sure? Look at some other ETF value ETFs. Tell me where this can't be.
I don't even know what other ones there are. Invesco S&P enhanced value. I mean, I don't know what enhanced value is.
Value with momentum.
This is ridiculous. All right, let's look at both of them. So, first one, enhance the value. And keep in mind, I have no idea what the freak enhance the value means.
United Healthcare. At least this one is value. Yeah.
This one looks more what I would consider a traditional value fund.
Yeah. So this is a value.
Maybe enhanced means deep value.
Maybe.
So let's see value with momentum.
Hewlett Packard.
Mohawk Industries, get out of here.
Paramount Skydance. I don't know if they're really.
Yeah, I'm not buying either of those over freaking SPYV.
I don't know, man. That's interesting.
All right. But yeah, freaking Amazon is a value company, sir. Amazon's a value company.
Maybe it's because it's not rebalanced. They haven't rebalanced in like 5 years or something. Maybe that's why.
I mean, I don't know.
Mm-hmm.
I don't know. But
value is subjective. No, value is not
it's
subjective.
not subjective. No way. You look at Meta and you look at Broadcom. I'm going to show you something. I'm going to pull up a spreadsheet I made. This is one of the most disgusting things I've seen in a long time. Like Meta now looks to me the way Alphabet was looking. It's not as bad. It's freaking getting there.
Yeah, because you got Zuck just saying, I'm going to spend money like there's no tomorrow.
Dude. Zuck has earned the right, though.
Steve doesn't have to convince me to buy Meta. I've held Meta before, and I think if Meta drops another little bit, I'll buy some Meta. Meta is one of those companies where I feel like, what's his name, Zuck, every so often has to get like get smacked around a little bit by the market, and then he's like, yeah, okay, maybe we won't spend as much money on the metaverse, and then go back to buying back a ton of shares again.
Where the hell did I build this out? Hold on.
What's Meta trading at right now?
A disgusting number.
638 on Meta?
Here we go. You ready?
Yeah, go for it.
This is where we are in today's day and age. All right.
If Meta drops down to like a 25 PE, it's not a bad pickup.
Oh,
man.
we're gonna get there, sir. So hold on. So Meta has a lower market cap than Broadcom right now. Okay.
Okay. That doesn't make sense. That's not right.
Look at the revenue difference. Actually, this is how much more revenue Meta does, how much more EBITDA and cash from operations it generates.
Huh.
And yet it's a smaller company. Go figure
this
that one out.
This is not right. It doesn't make sense. Look at that free cash flow number. The only thing that you could ding Meta a little bit is that they're spending a lot of money on CapEx to build out the AI stuff.
Almost double the free cash flow, and they're spending 120 times more in CapEx. And they're still generating double the free cash flow.
What's the growth rate on Meta?
I'm glad you asked.
I'm looking at spreads on this thing already, bro.
I got you covered on the Meta growth rate. Hold on.
Oh yeah, actually, I found.
Well, look at this. So Meta, I actually don't have Broadcom on this, but they're expected to do almost 30% EPS growth over the next 2 years. They're trading at less than 19 times 2027 earnings.
Yeah, that's actually not bad at all.
It is so cheap right now. Now, in all seriousness, Broadcom is growing like a beast. So I will do the metrics right now live. Just give me one moment, and I will pull the numbers.
Meta. Forward valuation. View sales.
I mean, Broadcom's growth is disgusting. I mean, they're projected to do 80% EPS growth over the next 2 years.
Mm-hmm.
It's huge EPS growth. But still, I'm sorry, Meta is trading at such a deep discount right now. To me, it's one of the most discounted companies there is. I think Meta and Amazon are the two biggest opportunities for long-term investors in big tech right now. I really do.
I mean, Meta is good, but I wouldn't say it's like, oh my god.
To me, it is because they got clobbered on some. So here's where I get really pissed off. It's just like Amazon from last quarter. Algo's got a hold of it because they saw EPS miss at $5.66 without looking at anything. Conference call comes out. Susan Lee, their CFO, goes down the road of this was a one-time tax expense of roughly $16 billion. And this is going to be positive for earnings in Q4 and every quarter going forward. And their free cash flow actually grew because the spread between how much cash from operations they generated versus how much CapEx they spent was more than $1 billion positive. It's crazy what's happening.
Yeah, I mean, it is pretty cheap. Look at this.
You want me to bring up your screen?
Yeah. So this was when Meta went absolutely like berserk. This is never going to happen again. So if anyone's thinking that you're going to get Meta at $80, like just don't bother. This was during Liberation Day. So EV to EBITDA had gone down to 13. Right now it's at 16. And it's usually traded in this range of about 20, right? So let's say this thing gets to about a 20 again. So what would be the EBITDA? What's the EBITDA projected to be in 2028?
For Meta, I have no idea. I can give you revenue.
I'll do the math later. I'll figure this out. It's not hard. Basically, you just take the EBITDA, give it the enterprise multiple, right, that it traditionally has, take out the debt, and then you get yourself a market cap divided by the expected amount of shares outstanding, and boom, there you go. That's your target.
Well, how about right now they're doing 98.4 billion in EBITDA? That's a disgusting number. Like just last quarter, their EBITDA was 25.5 billion.
Debt yield. This is their enterprise value. Now, the thing is, the reason why they're probably getting their enterprise value smacked a little bit is because they took on debt, long-term investments, liabilities, debt, long-term debt. I mean, it's the same thing with Oracle. I mean, yeah, that debt is really like probably causing some strain. I mean, it's not a lot. It's got 28 billion in debt. It's not like, oh my God, crazy amount.
Yeah. Oh no, 28 billion in debt. Has anybody looked at their balance sheet? They have 44.5 billion in cash on hand.
Yeah.
That's not including long term. They have another 25 billion sitting in long-term investments. I mean, the people who think them taking on this debt for the data center, they just decided it's better to keep the cash on the balance sheet and take the debt because of how much their EBITDA is.
This is the target for me. I'm looking at this right here. If it gets to about a 15, which is not that far off on the, yeah.
Meta is pure value right now.
For its growth, yeah, absolutely. Do they own any percentages of any of the hyper, like what are they called? The major models? Do you know?
No, I don't think
And
so.
I think at some
I know what you
point,
mean. The way that Amazon owns a piece of Anthropic, et cetera, et cetera. I don't believe so because they built Llama.
at some point, I think these guys are definitely going to launch their own cloud service. I don't think that they can invest this much in CapEx without having some generator of revenue outside of their just social media business. Because
So
I think
I was thinking about
social
what you
media
said with
saturated.
this, and I think you're right, but I think it's an adjacent play. I think they're gonna rephrase this. I think that what they could do is take a certain amount of their data center and become a Nebius or a CoreWeave.
I'm not a big fan of those. I'm not a big fan of CoreWeave and all these things. I have to look at their depreciation schedules.
Sam did a pretty good job of convincing me, but I didn't buy it. And I got to tell you, when I see the backlog for the three big ones and that Microsoft just did a $15 billion deal with Nebius, I mean, Jesus.
Yeah. Yeah, I definitely have to look into Nebius. I think this recent sell-off might actually pique my interest a little bit. Because I mean, this company is way beyond just a neo cloud. Like total
Look,
revenue.
we know that this isn't stopping. We know that there is a 700 billion backlog just for four companies. I'm sorry, three companies of cloud, not even what they're going to spend on CapEx. So $700 billion backlog for cloud services from Amazon, Microsoft, and Alphabet signals there are so many companies that need more cloud space and more generative AI. It's not slowing down anytime soon. Bless you.
You know, it's in my analysis paralysis. I missed out on a lot of this stuff. Like I had mentioned this on my Patreon/Discord thing about in August. I was like, oh, you know, there's probably some data set. I called you about it, right?
Mm-hmm.
I called you about it. I said, you know, a lot of these things, I remember it's because Google had bought TerraWolf. And that was the thing that triggered my interest in it. But I kind of just said, well, I'll look into it later. And then it kind of just got out of my wheelhouse. And now TerraWolf's almost at 16. Shit. I wonder if it's too late or if it's early to get it. And I always feel like I'm chasing these things now.
No, listen, I'm with you.
Hut 8 mining. Look at this. Hut 8 mining was $12 and now it's $55.
Crazy.
You know, Bit Farms. Let's see. The one that I saw that had, all right, whatever. I'll leave it. I'll have to talk to Sam.
Yeah, talk to Sam because he has gone down the rabbit hole the most out of anybody I know with this stuff.
Yeah.
And just so everybody sees, like, I'm not just jumping on the Meta bandwagon. Like, I've been writing about Meta since 2018. And if you go through all my articles, everything was bullish. And this is through every bad thing that's ever happened with the company. Like 30 something articles, all bullish. From the Cambridge Analytica to them going to 92. So I'm not just jumping on the Zuck bandwagon. I've been on it for a very long time and never changed my stance.
Yeah. Yeah, I was actually batting down a bunch of people on Twitter too when
you were, I know you and Vitaly both bought Meta around freaking 88 to 92 or something like that.
There's this guy. I don't know if you've ever seen it. Hold on one second. Let me show you. It's ridiculous the amount of I don't want to call it lies, but basically they were trying to wasteland capital. Let's see if I can find it. And that's how some of these things are, man. Like, let me just see. Okay, this guy. E-commerce share.
Oh, wow. Is this true?
What?
Burry bought puts on NVIDIA and Palantir? I mean, listen, he's got a bigger set of balls than anybody I know if he bought puts on freaking NVIDIA going into this print.
You never know, man. You never know.
Did I show you my new CapEx slide?
No, what?
Dude, check this out. This is just the four, okay? Meta, Microsoft, Alphabet, and Amazon. So in 2024, the combination of the four spent $217 billion on CapEx. They grew the CapEx by 55% year over year. In the trailing 12, they're at $330 billion. They grew CapEx by another 52%. And based on the earnings calls and where Microsoft finished their fiscal year, because they report on a half-year basis because their fiscal year ends in Q2, they'll end up spending $355 billion in CapEx, which will be just over a 63% year-over-year increase. And think about this. The four of these companies, $355 billion in 2025 spent, and the three cloud providers have a $700 billion backlog. This number in 2026 could very easily be $450 billion allocated toward CapEx. This cycle for NVIDIA is not slowing down, and Birdie's got a bigger set of balls than anybody I know buying puts or shorting this into the print. That's crazy.
I mean, he probably sees a deceleration in growth. If you see that, I mean, they could get re-rated lower, but I don't know. Did he really open up? Look, can you open that? Let me see. When did he open those?
I don't know. That's what everybody's saying in the chat. Here we got another one saying 14% of his portfolio is puts on NVIDIA and 67% is puts on Palantir. Now we got Kris going down the freaking rabbit hole. Like,
good luck, buddy. Good luck. I've played with that fucking with that fork in the outlet. I'm not doing that again. I'm good.
No.
As much as I want to short Palantir so bad. Every day I wake up and I'm just like, is today the day I'm going to short Palantir? And then I remember, nah, not worth it. I'm good. You know, betting against your friends never works out anyway. So I'll stay
like
away.
Playing dark side, man. You don't go to the freaking craps table and play the don't freaking pass. Just don't do it. Only time you do that is if you're by yourself. Because karma will come back and kick you in the face.
Yeah, no, I'm good. I don't want to play. I don't want to play with that anymore. I still get trolled on Twitter all the time. So now I just block out all the trolls. People keep sending me that I don't know if you want to play it. Go to Twitter and just go to Garcia Capital.
I saw something with you where they put music to it. It was ridiculous.
Yeah.
It was ridiculous. No, I don't want to play it. There's no reason.
Kris, did you own Palantir? Yeah, I own Palantir. I sold it very early in its growth cycle. I sold it right when they started to launch AIP, and I was just like, man, I don't think these guys deserve my money. And then they just started to reaccelerate, and then that's it. It was over. You know, I didn't think that AIP was going to be as successful as it was, and I became too dogmatic in trying to like rationalize that valuation. And sometimes the valuation doesn't make sense. You just have to live with it. You know.
No, you don't always play don't pass. A 7 has a 16.67% chance of coming out. Once a point is established, the 6 numbers that have a point is a 66.67% chance of coming out. You have a 50% house edge every roll of a point coming out. Playing don't pass is not a good bet. Just saying. I know the numbers. I've done the math.
You know, one of the reasons why I got out of Palantir that I should have been a little bit more skeptical. I asked people who worked with Palantir, the software itself, and they all told me it's garbage. They all said it to me. They're like, no, this is some old Spark bullshit. It's not worth it. Like, we can do a lot of this stuff in-house ourselves, and it's just not worth it. And they were like software engineers, devs. They knew what they were talking about. At least that's what I thought. And when I looked at this whole thing, I was like, yeah, that makes sense, you know. And then I started doing like some independent, like just reaching out to people that I know, and they said the same thing. They're like, no, Palantir is just running on old Spark. It's really hard to use. Like, you know, it's all proprietary stuff. There's no really good tooling behind it. And I was like, okay, you know, it's probably right. And so when Palantir got, you know, when it was there, I sold it off. Now, right after that, they launched AIP, and AIP absolutely hit it out the park for these guys. And they were able to get a lot of contracts. And, and then they started doing boot camps, and that really accelerated their growth. But yeah, a lot of people that I've spoken to said that it was a dog shit product. Like Foundry, let me rephrase. Foundry is dog shit. That's what they said to me. So yeah, sometimes you gotta reach out to more people, I suppose.
Look, you've had a lot of hits. It's okay to get out of Palantir early.
Yeah, but that's a 20x, man.
I get it.
20x.
Listen, you can't think like that. Think about this. I sold AMD at $3.68.
Yeah.
Think about that. Just wanted my money back because it was stuck between 198 and 220 for God knows how long.
Wait, Kris, I'm guessing you'll short Palantir again when Microsoft finally beefs up Fabric into competitive space, probably another version or two. See, that's the other thing. I've been asking people like, hey, what do you think of AIP and all this other stuff? And they're like, the same people, they're telling me the same thing. They're like, look, it's not that big of a thing. These guys are like, they're doing a great job selling the product, but it's not providing the value a lot of businesses think it is. And the way that their sales channel operates is that they target dumb executives rather than actual technology people at the company. And they're able to make these sales thinking that this company is going to come in and revolutionize things. And then, and it doesn't necessarily work out. And there's a lot of legacy shit that a lot of the guys at the ground they have to deal with. So, I don't know. The guys you're talking to aren't that smart. I guess not. I don't know. We use AIP. It's meh.
Hey, look, this is what I always say about Salesforce, right? Whenever I talk about Salesforce, everybody starts going down. It's a dog shit product. It's a dog shit product. Nobody likes it. But I look at the numbers and they're still freaking growing. So if it was a dog shit product, company wouldn't be growing. So you got to take everything with a grain of salt. Everybody's got an opinion, but at the end of the day, the decisions come down to one or two people in the company, not 10 or 20. So
yeah. I mean, this is, like I said, this is where you have to when you're doing your channel checks among people, you have to get outside of the what is it called? The bubble. I think it's also some of it was confirmation bias too. That probably put that in there. You can rebuild AIP you can rebuild most of it in-house if you have the data and time. That's the exact same thing I heard from every single person I spoke to.
If you go down the route of using Power BI and using Fabric, sure, maybe. Yeah. But I don't know. I mean, I do think Microsoft is really going to give everybody a run for their money because all the data, like when you really think about it, all your company's data is in SharePoint and OneDrive. And now if you apply Power BI to it and then you throw it with Fabric, they're probably going to come out with some type of little upgrade charge to do everything for you in the future. That's where I would start getting worried because people don't realize even if you put everything into Palantir, you're not getting rid of Microsoft. Nobody's getting rid of SharePoint. Nobody's getting rid of OneDrive. Nobody's getting rid of Microsoft freaking E3 and E5 licenses. It's just not happening.
So someone's like, both of you missed out on it. Now you're talking. I'm not talking shit. I'm telling you that this is what I heard about it. I don't really care.
Shareholder Palantir.
Yeah, I don't really care.
I have a bunch of shares that have calls on them, but I have a lot of naked shares too. Like I'm a shareholder. I've been a shareholder since 9. Don't talk to me about missing Palantir. Okay.
Yeah, it's not about missing anything. I'm just trying to tell you, like sometimes when you go out there and you talk to people, dude, I've spoken to people who like worked. Let me just rephrase, worked at Palantir. They sold all of their shares because they said it was overvalued. So, like I said, depending on who you talk to, you get different opinions, So the question that you have to ask yourself as an investor is, who do you believe? Right?
Like, how about this? I'll bring up the receipts again. When did they go public? Yeah. November 2020. My first article came out in January 21 about Palantir, and I've been writing about them ever since. So I can show you the receipts.
Dougie's like Chris loving the fact that it's down 5%. I don't have a short position against it. I don't really care if it goes down 30, 40, 50, 70%. It makes no difference to me. I'm not in it long. I'm not in it short. It's one of those things that I'm just, hey, I'm good. There's how many other companies, like 4,000 other companies in the market? I'm pretty sure I could do better analysis on the other 4,000 and fixate myself on one company. And if Barry's shorting it, I mean, here's the 13F filing, by the way. Let's see. Here, this is what he's doing. So his largest position right now, almost $1 billion.
Just give me 1 sec. So just for everybody, wasn't easy to write articles on Palantir when it was $7.11 in 2022 when the freaking market was crashing. Okay. Very bullish at that point. Just saying.
Yeah. Right here. There's puts on Palantir, on Nvidia. He's got calls on Pfizer. And what's HAL? I don't know what HAL is.
No idea.
Energy. He sold his UNH position and opened up with Molina. Believe it or not, that might not be a bad idea. Huh. But he really is short on Palantir. Look at that shit. 5,000 market value.
Yeah, because the valuation makes no sense.
Yeah, the question is how far his puts.
Yeah, who knows?
And remember, this is from last quarter, so.
Oh, Halliburton is Hal. Okay.
Halliburton.
I actually like Halliburton and I like Schlumberger. I like both of them. Because look, it's a very easy thesis. We need more energy. Upstream producers are going to pump more gas. They need more wells. They need more drilling. Schlumberger and freaking Halliburton should both do well.
U.S. military general CEOs, their users, all hyperscalers, Satya Nadella, Jensen all speak highly of Palantir. I know, that's what I'm saying, that this is where the conundrum lies, right? You speak to one group of people, they say Palantir is the future. And then you speak to other people who are actually users of the product too, and it's verified users of the product. They say to me, it's not good. So like, who are you supposed to believe? So I don't know. Like I said, when you get this much conflict, you're like, okay, whatever. Can I say that it's overvalued? Yeah, but valuation, as Spider put it, is very subjective apparently these
right.
days.
Hey, Apple, Microsoft, and Amazon are freaking value companies, baby. Let's go.
Yeah.
Amazon is value. Let's go.
Burry going bankrupt. Yo, listen, Burry's called a lot of things wrong too. Okay. And you don't know if he's actually closed this position out. Because remember, this is from last quarter. So you don't know. You don't know. He might have been short when that short report came out and then locked in his gains. And now the thing is back up again.
The worst thing for Burry is that he called the uncallable. And now it's like he has to just come up with the most crazy stuff. If Palantir gets cut in half, that's not even a fraction of difficulty of calling of what he called. So he's got to look for like really hard stuff to call to keep up with the 08 call. Nobody called that.
Yeah. I called the 08 call. I just didn't know what. Like, I knew home prices were overvalued, and that was just anecdotal.
Yeah,
I
but what he did was something nobody did. You know what I mean?
Yeah, 100%. I didn't know how you could short the housing market because that was like, I was in college.
He created a market for it.
Yeah.
Think about Andrew Left shorted Palantir, I believe. Like,
that's what I'm saying. That some of these guys might have, done the stuff and then closed them out. Just look at the stock draft. Look, Peter, me and Steve, we are old. Okay, when it comes to our age, we are not the type of people that have this crazy optimistic worldview where everything can grow at an exponential pace forever. Like guys like me and Steve, we don't buy Rocket Lab. Sorry, we don't.
It's
Rocket
over,
Lab is
it's over a year period.
yeah.
In Q2 of 26 and Q3, there is a small chance that we start getting into recession territory.
It doesn't, like I said, it doesn't matter, man. A lot of what we invested in, like can you pull up the stock draft, like all four of or five of us?
Yeah, I gotta find
You can almost see the scarring on each of us based on the picks that we have. Amit and Matt have the least amount of scarring because they're the youngest of the group. So they're like, screw it. I'll put my money in some crazy overvalued shit. It don't matter to me. Versus me and Steve. Steve, what's the most overvalued company that you bought ever?
What I mean, in my life?
In your life, yeah.
I don't know. I guess you could say Ethereum and BMNR is a pretty crazy pick for me.
Because that's technically nothing there, right?
Right.
I mean, there's no earnings or anything.
Right.
I'm trying to think. I bought, and I'll tell you guys, I bought Valiant Pharmaceuticals at near the top. Okay. I remember when Bill Ackman was like, Valiant Pharmaceuticals.
Dude, we're not doing as bad as I thought.
Huh?
We're not doing as bad as I thought.
No, I mean, we have great picks. I don't know why everyone's like, oh my God, you guys are like under, like, bro, I'm doing 11%. It's not that bad. I got a couple of stragglers.
Can change. I may be in last, but we're going until 6:15. Okay. There's more than half a year left, and this can change drastically in a quarter or two. Drastically.
Okay, let's analyze each one. So start with Amit.
All right, start with Amit.
Amit's the one that's winning right now, right? So just scroll into that one, like zoom into Amit's thing. All right, so he's got Palantir, which is crazy high PE. Hood, he's got crazy high PE, but at least with Hood, they've got great growth rate that seems like it's durable, but that's there. Tesla, same thing. Crazy high PE with businesses going down. Huh?
I forgot he took Nebius.
He got Nebius because the chat was all over him to pick Nebius. So he's like, okay, I'll pick Nebius. You know, Grab is something that he's done a lot of his own internal research. So he's happy about that. JP Morgan is like a market performer, like one of our companies. AMD, I think he got right in that they were gonna benefit from this AI build out. But once again, AMD is subject to that build out. Duolingo is crushing
on the trade offer. I should have took him up.
What was the trade offer?
He offered me Apple for HIMS. Because I took HIMS, hoping I could deal it to somebody for something that I actually wanted. And at the time, I was lukewarm on Apple.
Yeah.
MSTR was my freaking moonshot if Bitcoin did something. It still could. I mean, I'm not mad at having this can turn into a 20 or 30% portfolio in 6 months from where it is.
Possible.
If Meta turns around and if freaking Netflix turns around, and if Bitcoin ends up doing something in 26, this could easily be a 30% portfolio.
I mean, Tom Lee said that Meta, what is that thing called? Bitcoin was going to start to go pretty crazy at the end of this year. So that's something to keep in mind. Let's look at Tanner's real quick. Actually, no, let's do Matt and then we can look at Tanner.
Yep.
See, Matt's got Rocket Lab, which is once again super speculative, but he's got it right. You know, he's got SoFi, which is now trading at double the PE of a traditional bank, which to me makes no sense. But hey, you know, they've got the student loan refinancing thing behind their back. That's helping tremendously. He's got Amazon, which is about same thing, market perform. ASTS is another one of those like pre cash flowing companies that's, you know, like a moonshot. And then he's got, you know, he's got okay picks. Other than that, he's got Accelera, which is like another moonshot. So he's got like 3 or 4 moonshots that have actually worked out well for him. So that's why he's up almost 40% on this position.
And Tanner's got an interesting portfolio.
Yeah. Nubank, he caught at the bottom of a cycle, which is pretty good.
I mean, Nvidia's ripped.
Yeah. Coinbase, TSMC, ASML. So if we were to just look at this objectively, I think Tanner's got the best, or he has the most exposure to AI. Right? With ASML, TSM, and Nvidia, that's like 30% of the portfolio.
Yeah.
I'm surprised that he's actually down on ServiceNow. He probably bought it at a higher price. Yeah.
All right, let's look at you.
Yeah, I got UNH, value play, Google, probably the best winner, value. It's a value play, right? Marvell. Marvell is my AI. Google and Marvell were the AI plays for me. And then I got like,
dude, people love to hate Cisco. Like, I've been writing about Cisco for so long. There's so much value to be unlocked, especially with all the networking equipment and security services these data centers are going to need with these huge build-outs.
Yeah. I used to work for Fiserv. Oh, that's cool. Yeah, I mean, my portfolio is okay too. I mean, I wouldn't say it's the greatest portfolio, but in terms of like safety, I think I did okay.
I am surprised you took ELF. Out of everything in there, I'm surprised you took ELF. ELF doesn't fit your investment.
I did one moonshot. I thought one moonshot.
That was the moonshot?
Yeah. Everything else is all value / slightly growing value. Novo Nordisk and Eli Lilly were my GLP-1 plays, because I think GLP-1s are still like going to do really well in terms of like total growth. Novo Nordisk is getting killed right now though, because of it's losing market share to Eli Lilly. So Eli Lilly is going up, so Novo's going down. But then Novo has this oral version of semaglutide that's supposed to be coming out next year. So that if it hits, it could change Novo's fortunes around. I mean, Novo's trading like right now at a PE of like 15 or 16, even with 20% growth. But their growth is slowing down significantly. Take-Two has Grand Theft Auto coming out next year. That was the crux of that.
Yeah, they pushed it off to May, which isn't great for you, but
yeah, it's okay. Whatever. Like I said, it's a balanced portfolio.
This can all change in a week. Like, this can be completely different. The one thing that Kris and I do not have are companies that have the potential to go down and get chopped in half at the moment.
Except Novo Nordisk, which
I guess freaking MicroStrategy for me. I'm sorry, MSTR for me. But other than that, it's really hard for freaking our stuff to get chopped in half. But look, if something happens with Palantir, that can get chopped. Yeah. Like, Hood can get chopped. Nebius, maybe not. Rocket Lab could get chopped. Celsius. So ours are definitely more conservative. There's no question about it.
Yeah, I told you. When I looked at this portfolio, like the draft afterward, I was like, man, everyone's picking based on their age. The youngest people have the most risk tolerance. The oldest people have the least risk tolerance. And that's why we're underperforming, because we're just not that risk on. Like, do you see Axon dropping by 50%? No. I don't know. Will it go 50% higher from here? Probably not, but no.
Guys, keep in mind Cisco did a partnership with Nvidia for networking stuff. So I would go look at that deal before you start making those types of comments.
Yeah. Yeah. One thing just to mention, I think someone's in the chat is talking about Fiserv. Fiserv is a very big company. Okay. They are very big. They actually have their hands in everything. And I'm sure that the person who's talking about Fiserv can actually probably talk about it. But it's a multinational. They're all over the place. And they're not going away anytime soon. Are you still interested in TTD? I don't think I was ever really that interested in TTD.
Trade Desk?
Yeah. Are you guys buying FI or no? I already have FI. I bought it.
I'm not buying.
I bought the dip.
Certain things I'm buying right now. That's not one of them. I'm currently buying QXO, Ethereum, and BMNR.
Yeah. I'm not really buying much right now. The one that I am thinking of buying more of is Verizon. Verizon is where because I genuinely want to buy more. I want to buy, well, one, I have a bunch of options on Verizon, but I'm actually buying a lot of stock too. Because the thing is, like, I'm at a point now I want to buy a house. So one of the things I'm gonna do is I'm gonna leverage that 7% yield um to my advantage. And now I can go to Sage Home Loans from Robinhood and get a mortgage for 5.5%. So I'm like, oh, well, I could just put this money in one hand, and and in Verizon, the dividend will keep growing, but my mortgage will stay the same. So now I've got the money to go ahead and do that. So I told my wife, I'm like, once taxes are done this year, I'll
Oh,
buy a lot of dividend stuff with that. I mean, most of my, like I told you, 60% of my portfolio is income now, so
dude.
I don't care.
Speaking of taxes, why doesn't any brokerage house that I know of now? If they do this, please let me know. Why does nobody just give you a running tab of what you owe for the year based on everything you do?
Because everything is about deductions too, right? Like no one can tell you what your current tax bracket
No,
is.
but no, but just heading obviously not that, right? You know the long term gain is 15% short term or 10% short term gains 20%, whatever the tax rate on options are. Like, why can't they just have a running tally on what you theoretically owe, just so you can have a tracker inside?
It's not a bad idea, actually.
It's a
That would be
great
really
freaking
nice.
idea. That way I know what I need to put away instead of having to try to calculate it and wait for my account to do it.
I
With
would like that.
1099 doesn't come out until the end of February for most of these brokerage houses.
I would like that. That would be really nice
It's
to
a
see
freaking
what.
great. Listen,
Yeah,
any brokerage house that is credible that does that, I'll move all my money there.
that would be good. Like right now, I'm estimating what my
Right,
end of
you
year
don't
taxes are going to
know,
be.
but all the freaking stuff that you do with options, how nice would it be if you just had a running tracker of what your estimated would be?
That would be nice.
Yeah, it'd be
I mean, I
really
make
fun.
quarterly payments too, so you know, yeah. Brokerage companies saw, please talk to your accountant. Yeah, that's true. I make quarterly payments too. You make quarterly payments?
Yeah, of course.
So yeah,
You
I've
have
started.
to.
No, well, I didn't have to up until probably
The
2 years
reason I say
ago.
you
I didn't
have
make
to
that
is
much.
because it sucks getting that type of bill and having to show it out at the end of the year.
Yeah, yeah, yeah. I'm not looking forward to tax season this year for sure. There's a lot of short-term gains that I
I mean,
took
look,
on
it's good
things.
because it means you made money, but listen, it's difficult.
Yeah, yeah. Uncle Sam's gonna get his for sure this year. But I also have a lot of long-term stuff too that I started to sell just to um just to de-risk a little bit.
You go down the energy transfer line.
No, no. I have to, like I said, next year, probably January, February, I'm gonna start to build out um a non-taxable, well, not a non-taxable, a taxable dividend portfolio where it's gonna be mostly qualified dividends. Maybe some capital return dividends as well, like ET, but we'll see. I don't know. Like I said, my goal now is income generation so that I can get most of my day-to-day bills paid and just relax a little bit, you know. I might quit my job next year.
Are you serious?
Yeah, yeah. The overnight job is killing me, man.
You can't switch your shift.
No, no, I don't want to do. I don't want to work during the daytime. Like the amount of BS that you have to deal with all these personalities. That's the one thing good thing about at night. I don't have to deal with a lot of people.
Everybody's sleeping.
Um, yeah, unless it's like an emergency, I have to really like jump into action during the daytime. I could theoretically swing it, but I don't want to. Like, so I'd rather just take. And not to mention, I don't know what Mamdami is going to start charging me. So I want to get rid of New York completely, disconnect from New York. Like right now, because I work in New York, I still have to file New York and Georgia.
We'll see what happens tomorrow. I'm not convinced he's winning. We'll see.
Bro, if Curtis, that idiot Curtis Sliwa, bro, I swear to God, Curtis, he hates Cuomo so much he won't drop out. If Sliwa wasn't there, Mamdani would lose, bro.
We'll see what happens. I don't think that this is a done deal.
I'm voting for Cuomo tomorrow morning.
We'll see what
That's
happens.
me in the chat.
I think it's going to be closer than what people think. If he wins, I don't think it's going to be a 95% thing. I could see him winning by 60%, but not as wide of a margin with the prediction markets have.
No. So the prediction markets are just saying who is going to win.
Right.
So if Sliwa wasn't there, then Cuomo would be much more neck and neck, right? Remember, what's happening is you got the Sliwa voters who technically are anti-Mamdani voters, but technically they're just throwing their vote away. And the Cuomo people are like anti-Mamdani. So technically, if you didn't have Sliwa and you just had Mamdani versus Cuomo, you could probably see Cuomo eking out a win. With Sliwa stripping away even 10, 20% of that marginal vote count. And the thing is, it's not like a parliamentary system here, right? Where whatever. So Curtis just hates Cuomo, man. I don't know what's happened. But the one thing I will say about Mamdani is that judging by his...
He's a great speaker.
He is a great speaker.
He's a good at speaker.
Which is bad because great speakers tend to be some of the most nefarious people who can sweet talk you into some bad policy proposals. I mean, the one good thing is that nothing can get really done that Mamdani is promising without Albany, right? And I think he's counting on Albany, where he's going to say, "Well, I tried, but Albany said no. So, hey, listen, it's what it is. What it is. That's what he's going to do." I think Mamdani is literally running not to actually benefit people, but to be his own guy. Like he wants to. You can tell he's like this. He has this accent change ups. He's always trying to do this people pleasing thing. I'm like, bro, you don't stand on anything. You basically, anytime you walk into a room, you mold your opinions to that room to gain popularity. What do you think about that?
We'll see what happens tomorrow.
Yeah, free everything.
We'll see what happens tomorrow.
Chris, what are your thoughts on Bitcoin and MSTR? I think they're both great. I think long-term they'll be great. Money, central banks are always going to print money, and there's no such thing as a limit on. I mean, there's no such mechanism on Bitcoin. So, and I'm a believer in Bitcoin. I just don't think it's going to grow at the pace that it did in the past, which is like 2,000% every year. But it's it'll beat the U.S. dollar.
Yeah.
I
think Bitcoin's going to do well, but we'll see.
What is the income tax rate currently in New York City? Okay, so just for people that aren't from New York, I'll explain New York taxes. New York, first you pay your federal. That's there. Then New York State charges 8%, 8.75, depending on your income bracket. And then if you live in New York City charges you another 2 to 3% on top of it. So your taxes ends up being like 11, 12%. And if you're in the highest marginal tax bracket already on the federal side, which is like 35%, you've got 35% from federal. And then you've got Social Security and Medicare, Medicaid. And then you have New York State taxes, then you have New York City taxes. So all of that stuff combined, and if you don't have any deductions, it really kills you. Yeah.
The next couple of weeks are going to be very interesting, to say the least.
New York is great if you are either poor or if you are super wealthy. The poor get all sorts of service benefits and all this other stuff. The rich get, basically they have the money, so they can avoid all the stuff. Like if you look at New York is very bifurcated in that all the public schools in New York City, with the exception of like Bronx Science, Stuyvesant, and Brooklyn Tech. Those are like the 3 magnet schools. Everything else is kind of like, public schools are not that great. Private schools are where all the hedge fund people, they all send their kids to. They all send them to private school. So. Question is, when are you moving out, Steven?
I don't know. We'll
Have
see.
you considered it?
We'll see what happens. We'll see what happens.
Yeah. Same in Atlanta, Chris. Yeah, that's right. That's not true. So if you go to like Cobb County, East Cobb, we have really good schools. So there are school systems in New York that are really good too. Like if you go to Long Island, like New Hyde Park, Hillside, not Hillside. Sorry, Hillside's not that great. New Hyde Park, that entire area in Nassau is good schools.
Well, you go a little bit further out east in Nassau, Syosset.
Yeah, Manhasset,
Jericho, Manhasset, Great Neck.
Yeah, those are great
incredible school districts.
And then if you go to like, then there's like places on Long Island that are not as good. Like White Inch is not that good. I don't know. I haven't been to New York in a long time, so I couldn't tell you. New Jersey is not terrible. New Jersey has a lot of good schools too. Huh?
It amazes me. So, and it's a little bit out of the way, but the next time you come up here, drive into Queens and then take the 59th Street Bridge back into the city. Okay. The amount of freaking just driving through that whole area, or maybe just take the 59th Street Bridge out of Manhattan into freaking Queens. Long Island City looks so different. I remember 15 years ago, it was just that big city building and the mini city building were next to it. It looks like a mini NYC now. It's crazy.
Yeah.
Like it's really insane what they've done with Long Island City.
Yeah. Oh yeah. Dude, I still remember when I first went to one of the hospitals I worked for, in Bed-Stuy. That was bad. Bed-Stuy back in the day, it was do or die. Bed-Stuy. Oof. That was rough. Yeah. Now you see just a bunch of, it's all gentrified now. A lot of Bed-Stuy is gentrified. Williamsburg used to be a bunch of warehouses.
Chris, what was your favorite pizza spot? Because you were in Brooklyn when you were here, right?
So there was this place in J Street Borough Hall that they still had $1 slice all the way until probably like 2014. If anyone knows what the place is called, but that's where me and my friends used to go. It's literally $1 pizza, $1 slice. It's probably made of cardboard, but it was only $1. Now I go into the city. Now it's like $3 for a slice. I'm like, what the hell happened? You know, there were still places in the city at one point that had $1 slices. I don't know how they made any money.
There still are. There's 99-cent slice shops now. They're packed.
Bro,
They're packed.
I don't know. I don't know if that. Are you serious? There's still places that have $1 slice.
Packed.
Huh.
I walked past one when I there's a pizza place that I like, and to get there, I walk past the 99-cent shop. Dude, always packed.
There is a really good pizza place. I don't know if you've ever. It's called Roberta's. I don't know if it's still that good, but Roberta's was good. I used to live around there, so let me just show you. Hold on. If you're ever in New York, if you want to live the hipster life, this is where all the hipsters go for pizza. It's called Roberta's.
Why does that sound familiar? Or maybe I'm thinking of Rosa's.
It might have.
Where is it?
Roberta's. It's like this. Hold on. It's in Bushwick.
Oh my God.
Okay, like right here. This is what it looks like. But don't judge a bit. They actually have like a garden at the top with fresh ingredients. But this is what the pizza looks like. It's really good.
Have you ever been to John's on Bleak? Ooh, that I do like the look of that.
Maybe we can get some pizza from there. Actually, pretty good.
Chris, have you gone to John's on Bleecker?
I might have a long time ago.
Go to the website and just watch the reel real quick. It's
Okay.
in my opinion, it's the best pizzeria in Manhattan.
This?
Yeah, so just go to their website
Okay.
because it goes through the whole thing without you having to do anything.
Yeah.
It's incredible.
Interesting.
Dude, this place is so fire. Oh my God. Like it is, Portnoy gave it a 9.4. And I'll tell you, it is hands down the best pizza in Manhattan. Hands down.
Okay.
There is no question about it. And their chicken parm is so freaking good.
Yeah. Looks really good. Man, I'm supposed to be on a diet, bro.
Oh my God, this
Losing
is such a great comment. Steve is talking about pizza. Chris is trying to sell an option on it. That's phenomenal.
Yeah.
Phenomenal.
Interesting. What other places in the city have you?
I mean, look, I like Patsy's a lot. I like Prince Street. Look, Joe's is just your classic. There's the Slice Shop, which is really good.
I wonder if this thing is still around. This was like
Never
my.
even heard of that.
This is where I took my date nights.
Don't be saying that too loud.
I don't care. It's not like I do it now. Shoot. Permanently closed. Yeah, they closed during what is that thing called? COVID, I think. This is where I took the dates just to make sure that like my date thought I was cultured, you know? It's like, oh, this guy isn't just like gonna take me to like some random places. And I knew the chef too. The chef was on what was not Master Chef, what was it called? Iron Chef. Iron Chef, yeah. So
Okay, I'm not letting this fly. I'm not letting it
Peter
fly.
Luger's guys, best
I'm
steak of my
not
life.
letting it fly. It's good, but it's very overrated. I will
Yeah.
send you to 5 or 10 steakhouses that are better.
Yeah.
But I will say, I agree. Brooklyn pizza is amazing. Now, I have not gone to Lucali yet, but I've been to Best. I've been to DeFara. I've been to L&B. I've been to Luigi's. I mean, Brooklyn's got fire pizza.
Have you been to what is it called? What's that market thing that's in the city now? Like where they have like a bunch of pop-up restaurants in the thing. It's called forget. I don't know, man. I haven't been to the city in such a long time.
But the one at Grand Central?
No. I think it's near the Village.
E Street Market? I don't know. Probably not.
Italy. Someone got
Italy.
it. That was Italy.
I've heard about it. I've never gone.
There's another place like that in near J Street Borough Hall in Brooklyn at the mall. Me and the wife went there like a couple of years back.
Yeah,
we have
New York.
Yeah, we have this place here in Atlanta. What is it called? Damn it! It's in Old Fourth Ward. I forgot. Damn, dude, I don't go out much these days. Huh? What is it called? Someone's in the chat. They'll know. What is the place called? That's like an old warehouse that they turned into like a whole bunch of like pop-up restaurants here in Atlanta. What is it called? It's near Old Fourth Ward. I don't know. Chelsea Markets, Peter Luger. Tanner and Amit are fighting over what?
What are they fighting?
Let's
about?
tune in. Let's tune in. Why don't you let stream into their their stream.
No, because then we'll get demonetized.
We're not going to get demonetized for reviewing their live stream, are we?
Yes, we will.
Unless they do it, we're not going to get demonetized.
I don't think we can watch their freaking stream. Oh, it's about Grab.
Let's see, Amit. Hold on. Let me see. Is it an Amit thing? Yeah. Hold on. Let me put it on. 1 second. 1 second. Let's watch these goons share screen. 1 second. Okay, there you go.
I really don't want to bring it up because I think we're going to
come on, man. It's not going to get demonetized. If it gets demonetized, we won't ever do it again. Come on, let's go. This is how you learn, Steve. Let's go. Okay. Can you guys hear?
No, you got to reshare it and you got to click the box on the bottom right. Everybody, Chris just made the same mistake I've been making for weeks.
Okay. Share.
There's a box on the bottom right when you go to share.
Entire screen. This one. Also share audio. There we go. Yeah. Okay. Now you can share. All right.
Above it is so horrendous.
Honestly, the fair value of this company could be $12. I'm not even suggesting it's not. I'm just saying you think that this quarter was exceptional.
Look, let me just make this very clear. I don't care if you like Grab or not. I don't care if you think Nubank. I really don't care. Like we're best friends. I don't love SoFi. I know you love SoFi. Like that. That's not the issue.
It's like watching Indian Urkel versus White Urkel, and then Roy's just watching both.
You don't care about it, right? It's not your forte. So to say it's mid, and then to say that A- is too high, and then the best reason I'm getting from you realistically is they beat EPS by 1%, and that the stock didn't go up. To me, is an abhorrent way to justify the argument that it's.
I used to remember the days where Amit didn't even know what a PE ratio was. You remember that, Steve? The good old days. Amit used to just be like, "Yeah, man, I think this is a great company," just randomly.
Dude, I guess when you have it up,
yeah, he has some growth. Hold on, let's see.
Not an A-. I mean, you have no justification to say it's mid if you don't understand.
I'm saying that like 85% of companies in the S&P 500 beat their estimate. So
again, what does that have to do? Grab is not in the S&P 500, and it's a growth.
No. I'm saying 85% of companies, okay, beat their earnings. So it's a good way to gauge how Wall Street looks at respective companies and then how Grab did compared.
What are they even arguing about at this point?
Dude,
that's not
okay.
I feel like they're just disagreeing with each other just to disagree with each other. They probably have the same conclusion, man. But they're probably just like Roy. Look at Roy. Roy's just smiling there because he knows. He knows. They're like, does Roy know that we're live streaming our streaming them? It's like
I just did a minute of us watching freaking argue.
Company determinant of the surprise of earnings. So like.
But that doesn't mean the quarter was mid, horrible, or exceptional. That's Wall Street's reaction and then the stock price reaction. The business is completely different from if the stock goes up or down based on the earnings expectations. Like, okay, hold on. So this is my point. Meta missed EPS by 86%. Was that a mid quarter?
No, but no.
Well, why? Because Wall Street didn't figure out.
All right, we'll stop this because it's like echo and stuff. So
that was a great point, Matt.
Let's join their live stream. Ask Amit for a link. I want to hear this. I want to chime in.
He didn't respond. He's in debate mode.
Not call him.
You have all right, guys. Number? You call him.
I will.
I text him. He didn't freaking answer.
Let's see. Call Roy. Roy is actually responsible enough to pick up. Be like, yo, tell Amit to send Kris and
Roy's streaming it on his. He can send you the link. He can send it to us.
Well, that's what I'm saying. No, I want to be in like the main one.
Yeah, so. give him a call.
I don't have Roy's number. I have it somewhere, but I don't remember. So, all right. All right, guys, we are going to end the stream here, and we're going to join over there and make fun of Amit and Tanner. Later, guys. Thank you for joining.
Thank you for joining, everybody. Really appreciate it. We'll be back next week with a new company to discuss. And you may see us on their little arguing binge in a few minutes.
Later, guys.
Later.